In January 2021, a battle broke out on Wall Street. But this time, it wasn't hedge funds versus each other. It was a ragtag army of Reddit traders taking on some of the most powerful players in finance. GameStop, a struggling video game retailer, suddenly became the hottest stock in the world. Prices soared, billion-dollar funds lost billions, and the financial world was flipped upside down. This is the wild story of the GameStop short squeeze, how Reddit's WallStreetBets turned investing into a revolution, and why it shook Wall Street to its core. In 2020, GameStop looked like a dying company. Digital downloads were killing physical game sales. The pandemic had crushed foot traffic. The stock was trading under $5. But on Reddit's WallStreetBets, some users believed the stock was heavily undervalued and, more importantly, heavily shorted. Hedge funds like Melvin Capital had bet big against GameStop, shorting millions of shares. Some Reddit users saw this as an opportunity for a short squeeze, where rising prices forced short sellers to buy back shares, pushing prices even higher. They weren't just investing, they were out for revenge. As users on r/WallStreetBets rallied behind the stock, the price began to rise. It jumped from $5 to $20 to $50, then over $300 in a matter of days. This triggered a classic short squeeze. Hedge funds scrambled to cover their positions. Melvin Capital required a $2.75 billion bailout from other funds like Citadel and Point72. Wall Street was panicking. Retail traders were euphoric. Memes, rocket emojis, and battle cries like Diamond Hands and Hold the Line took over the internet. GameStop became a symbol, a David versus Goliath moment in financial history. Then, suddenly, Robinhood, the app that helped fuel the frenzy, restricted buying of GameStop and other meme stocks. Users could only sell, not buy. Prices crashed. Chaos erupted. Robinhood said it was due to clearinghouse requirements. They needed billions in collateral to settle trades, but many saw it as protecting hedge funds at the expense of retail trade. Congress got involved. CEO Vlad Tenev was called to testify. Lawsuits were filed. Trust in Robinhood was badly shaken. GameStop's price eventually crashed back to earth, though it remained volatile. Melvin Capital, one of the biggest losers, shut down in 2022. Regulators began investigating payment for order flow and market fairness. The whole saga exposed cracks in the financial system. It showed how retail investors could move markets, how apps like Robinhood gamified investing, and how Wall Street wasn't ready for crowdsourced trading movements. But it also sparked a movement, a new generation of investors. The GameStop short squeeze was more than a market anomaly. It was a cultural moment where a group of internet strangers challenged Wall Street and left a permanent mark.